Hi, this is Zach Mead from Zach's Traders Cafe with a look at some single stocks on Monday, the 3rd of October. Starting with Altitude Group, which I've been looking to cover here for quite some time. Rising trend channel here from the end of July, top of the channel heading towards the 100 pence area, and that target valid really while we hold above the 60 pence area. You can use the 10-day moving average now at 50 pence as a trading stop loss, but the shares should ideally hold above 60 pence ahead of the 100 pence target over the next month or so. Any dips in the meantime towards that mid-60s zone regarded as a buying opportunity, especially given the way that the RSI at 85 is so overbought at the moment. On to Barclay Energia, which had its praises sung by the Midas column over the weekend. Here we've got a rising trend channel in place since earlier this year, since March basically, and that's heading towards 60 pence plus, even though we've already had a big move today. 60 pence plus is the target over the next couple of weeks, especially while there's no break back below the former September resistance at around the 51.5 pence level. So ideally no break back below that ahead of further gains. Hikma Pharma is next, back in the blue chip area. A messy chart here over the recent past. Looks as though some stability is coming in here. That's set on the basis of the RSI, which has bounced off or bounced above the oversold 30 level of late, and there's also been a gap to the upside. Maybe if you are cautious on the shares, wait for an end of day close above the 20-day moving average at 21.10 before targeting 21.76 at the 200-day moving average. Stop loss obviously back below last week's £20.04 support. On to Ocado, which has been battered around a bit of late, competition fears amongst other things, but looks like there's good support here coming in towards the £2.50 level, the slight bear trap rebound for the shares. While there's no end of day close back below that, we could see the shares bounce back towards 277, which is the 200-day moving average level, but clearly at this stage that is only expected to be an intermediate move. Oil stocks back in gear after the OPEC accord, gap through the 50-day moving average for Royal Dutch Shell at £19.70 last week, and it looks as though, at least while we're above the 50-day line there, we could head as high as £23, which is the top of a rising June trend channel. That would obviously have great implications for the FTSE 100 as far as it getting back above 7,000 is concerned. On to Sports Direct, and with Mike Ashley back in charge, looks as though the shares are finally starting to stabilize. We had a gap higher through the 20-day moving average in July. We've held above the top of that gap, which is a bullish sign, and allows us to suggest that the shares are in a rising trend channel, which could guide them back towards the £3.50, maybe even £3.64 level, which is the 200-day moving average. If you're cautious on the stock, wait for an end-of-day close above the 20-day moving average at £2.99, which is not too far away. Finishing off with a minnow. Sirius Petroleum had its fans amongst private investors over the recent past, but looks like we've got a rounded floor here over the past year and a half, broken above the 200-day moving average in July quite nicely at 0.31 pence, and at least while we're above the 50-day moving average at 0.38 pence. A target here as high as 0.8 pence could be on the cards, which is the top of a rising November trend channel. That could actually be hit by the end of November if things proceed as they have been of late. That's it for me. More updates at the same time tomorrow.